Hello again, and welcome to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. My name is Randy Cook. Each week, Jay and I sit down here and go through some of the topics that people are concerned about, worried about, and maybe sit down and talk to Jay about when it comes to their retirement. So let's dive right into it. One of the things, Jay, that people do, and it's a smart thing to do, we talk about this all the time. When you get toward retirement or you leave your employer, maybe you move on to another employer in the latter years of your career, you take the money from your 401k and you move it over to your own IRA. You get more control. You tell us all the time, I get more choices.
That's right.
The world is your oyster now. You can take a look at thousands of things to choose from instead of just maybe 10 or 15 in your 401k. Well, the people at Vanguard say there are plenty of people that are doing that, but then it just sits. What Vanguard does and what most everybody does is they put it into a money market account, and then they establish your IRA, and then it's up to you to say, okay, this is how I want to deploy the money. I want to put it in this fund and that fund and this fund, and here's the allocation. But people don't do that. They let it sit there. It says 27% of people roll over their money, and it sits in cash for 7 years.
Oh.
Okay.
That hurts.
So what do you see here? What I think is people get out of the risk of the market, and they kind of like that sitting there in cash. It's kind of like it can't go up, it can't go down. It's just going to be there for me. And it's a risk conversation. But if you don't deploy the money, you kind of mess up on the growth. What's going on here?
Yeah, but to your point, I don't have the volatility of the markets, etc. Yeah, that feels great. There are very, very, very few people around that are going to be able to make their retirement work without having some sort of growth on their assets. Sitting in cash like this, we've talked about it before. Yeah, I mean, 18 months ago, 12 months ago, when you could clip 5% or a little bit more even, right, from a money market, well, that's pretty good. You got $1 million in there, you can make $50,000 a year. Well, it's not that anymore. You're probably closer to about $35,000, and if we're talking again next year about this, it might be more like $25,000, right? It's going to be less and less, and you're going to have to go more and more into what we call the capital, which is the basis of your investment, your contributions, and not living off your growth, and that's a recipe for disaster. And what stinks about that? It's a recipe for disaster that you, without doing some planning, without working with somebody, you're not going to realize until you're well into your retirement. And frankly, it's too late.
Okay.
You've eaten through a lot of your capital. You retire at 60. Well, it's likely going to be 70, 75 years of age before you realize, oh, wait a second, like I've eaten into way too much of this. I haven't invested the right way where I can make this last my whole retirement. And also now I'm 75. I really can't take too much risk at this time. It's everything comes together and closes in on you at once. And more than likely, when we see somebody come to us and they've been in cash or cash equivalents, right? Money markets, CDs, anything, checking accounts, savings accounts, whatever, something like that. The reason that happened is they were invested the wrong way, too aggressively usually. When the market went down, they freak out, sell, go into cash, and say, "Well, when this is all over, I have heard this so many times in my career. When this is all over, I'll get back in." The next thing you know, 7 years later, you're still sitting there because the market takes a run. Well, it's gone too far now. Comes back a little bit. Oh no! This is the start of a big correction. And look, the blink of an eye, 7 years is gone. And, what have you lost? Maybe 80% return on your investment with the way the market has been the last 7 years.
Right. Yeah. Right. So when people go and do this, maybe they don't realize that there are lower risk options that are available. I mean, it's not like, getting into the market doesn't have to be you're in a hedge fund or you're buying Bitcoin. There are lower risk options within, and you talk about, a standard deviation, how much wobble there is in a certain stock or in a certain fund. You can find things in the market that don't wobble so much. And, consumer staples and utilities and things like that. These are things that people use really in retirement for market exposure, but not a lot of risk exposure. So there are options out there.
Yeah, I mean, the reason there's thousands of different options you can invest in is because there's a lot of people with a lot of different things they're trying to achieve. And there's quite a few of them out there right now that are retirees, and they've either retired or they will be retiring very soon. And this is the situation the vast majority of retirees are in. Hey, I need some growth, right? Like, I realize I'm going to be in retirement for multiple decades. I need some growth. I can't stick my neck out there too far because I'm retired now. I've had that change where I've gone from work life to retirement life, and I'm not accumulating money in this retirement vehicle now. Now I'm going to be drawing down on it and using it for the rest of my life. So yeah, I do need some growth. I can't stick my neck out there too far for risk. Be great if it had some income it could spit off. There's several different things that you're trying to do. And what happens with most of these people is I'm a big advocate that people move their money out of the 401k for this reason. Your options go through the roof. We've talked about that before, okay? If you are not incredibly savvy with the markets and what your investment options are, or you're not going to work with an advisor and you're a do-it-yourself sort of person, you probably should leave it in your 401k. Because you are going to get into the investment world and you're going to be overwhelmed and say, I've got 10,000 options here. Like, where do I go? What do I do? What do I choose? And you know what you'll do? Nothing.
Yeah, you'll get paralyzed.
You'll just stay in cash. It's paralysis by analysis. And if you're not incredibly savvy, you're not going to work with an advisor, you probably should leave it in your 401k because your options are limited. That's probably a good thing for you in that situation, actually.
You're listening to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. If you can kind of relate to what he says, I don't want to stick my neck out there too far when it comes to risk. I'm kind of a conservative person. I've always been that way. I don't want to go off and do hedge funds and Bitcoin and private equity and all these things that they talk about now with these huge returns. Well, with huge returns also comes huge risk.
That's right. So
that might not be you, but there is a place for you. There are options out there. Let's explore them together. Retire210.com is the website. Retire210.com. Look up Jay and find out more and give him a call. 210-985-6200. It's a no-cost, no-obligation meeting about your retirement. We have what's called a Get Me to Retirement 5-step process. You can see that on the website. It's really a lot of listening in the first couple of meetings there and figuring out exactly what you've done and what you want to do. And let's see if we're headed for some difficulties. 210-985-6200. Okay, so we talk a lot about Roth 401ks. We talk about Roths. We talk about 401ks. That's where all our money is. That's where we've been told to save, so we have. Well, in 2015, just 10 years ago, about 60% of employer plans had a Roth 401k option. Today, that's up to 95%. This is a very, very good thing.
Yep.
So can you just tell us the difference between a traditional 401k and a Roth 401k and how we make the decision how much should be in each one? Is there a point where we say enough traditional, enough taxable money, now I got to go over here? Explain that whole process.
Let's talk through that, and let's deal with what are the differences between these two, because most people have some sort of rough idea. Yeah, I know there's a difference with taxes, but sometimes someone tells me this one's better, someone tells me the other one's better, whatever it might be, right? This is the simple version of it. The non-Roth contribution, let's call it a traditional contribution, right? You're going to get a tax deduction for that. You put $1,000 in, you make $50,000. You put $1,000 in your 401k contribution. The IRS looks at it as though you made $49,000, right? So, well, you didn't pay tax on that $1,000. That's pretty good, right? It is good until you've got to bring it out at some point, and then you're going to pay taxes on that $1,000 and whatever the growth is going to be on it as well. So, pros and cons there. The Roth side of it, the exact same example, you put $1,000 into your Roth component of your 401k, you make $50,000. The IRS is still taxing you on the full $50,000. You didn't get a tax break to put that $1,000 in there. You kind of took the pain up front, if you want to look at it that way. And then when you get to bring it out in retirement, that $1,000 and any of the growth on that also comes out tax-free.
Okay.
Pretty amazing tool if you can afford to pay the tax up front. As far as where should these breakdowns be, I'll start with this. Just start contributing. To start with, just start contributing to the 401k. Because unfortunately, a lot of people don't even contribute. And so that's the biggest thing I'd say is if you're not contributing to a 401k because you're paralyzed by this decision of, do I do a traditional contribution? Do I do a Roth? Just do it. Just get rolling. Then come in and we can have the discussion on how should you split everything up. A lot of people are leaving money on the table because they're not contributing at all and they're not getting an employer match. Every time someone comes in and I ask them about the 401k, oh, I'm not contributing. Is there a match from your employer? Yeah, they're going to give us a 6% match. That's 100% return on your money. Right. Immediately. Start contributing and we can have the conversation. And the Roth component can be a hugely valuable retirement planning tool for us.
Yeah, I talked to a number of different people, and one said, you know what? Just when you get started, put 1 or 2% in, and then every year go up 1 more %.
Sure.
That's not a big decision. Maybe you get a raise, maybe you get a 3% raise or a 5% raise. Take 1% and put it in the 401k. You probably won't even feel it.
Yeah.
And that way you're moving toward where you want to be. I mean, to get up to 10, 12, 15% would be fantastic, but it takes time to get there. And, that is something that you can sit down and talk through with Jay. And when you get to retirement, you may say to yourself at age 62, I don't think I want to put money in a traditional 401k anymore. I've got that Roth option. Maybe I should start packing money in there. Great discussion. Let's get to it. Retire210.com is the website, retire210.com. And there's a place at the bottom of the page for you to put a little information in there. Say, hey, I want to talk about my retirement. I want to get a date on a calendar. The team will reach out to you and we'll start that process. You can also call 210-985-6200. 210-985-6200. All right, so financial advisors are supposed to put together a retirement plan with income and protection and growth and all of the different factors that you need in retirement. But I found that there's a problem here with the confidence on how these things are going to work. It says only half of advisors believe that their clients are financially ready for retirement, and only 11% believe that they are emotionally ready for retirement. So, Jay, we talk about one thing that you can do is if you have another advisor and you want to check that plan, bring it over to Secure Financial Management, and you'll put it through the ringer. You'll put it under the microscope. You'll see what you see. Have you ever had that experience where you look down and you go, this is never going to work? These numbers don't add up. Do you see that?
Yeah, unfortunately we do. And we've talked about this in past shows, is that for an advisor, the easiest thing, and unfortunately this does happen in the industry, the easiest thing for them to do is have a client who comes in who's got, $1 million.
Okay.
And they say, well, I need $15,000 a month in retirement income. We're doing the show right now, right? I don't have my calculator in front of me. I don't have any software in front of me. I don't need it. That's not going to work.
Right.
It's just not. Unless they have a pension in addition to that and they have rental, who knows, right? But if they've got that $1 million, it's never going to happen. There is no investment I can put you in that's going to make that work. But the easiest thing for an advisor, all right, whatever, bring the money over. Yeah, we'll get you 15th. And they've gathered assets, and when everything falls apart, well, it's not my problem, right? That's the easiest way to do it. And unfortunately, that happens all the time in this industry. We have clients that we lose to other advisors because we create a plan and, John down the street says that I can spend double this amount. Well, I can make this look pretty too. Whether it's real or not is a completely different story. So when you say only half of the advisors think their plan's going to work, well, I would say that's probably right with those caveats that I just mentioned. And the other thing they say here is 11% believe they're emotionally ready. That's something we talk more and more to clients about, right? Is when we get done with the plan, let's just say it works. Like what they're trying to achieve, they've got the assets to support it. Let's just say that's true, right? The next thing I say to them is, hey, just because the money is there, just because we've checked that box, that doesn't mean you should retire. And there's some people that say, like, just having done this thousands of times over decades, when someone walks in the office, you can kind of get the feel right away, like, hey, these guys are done. Like, they just do not want to go back to work anymore. There's other people where I say, hey, look, you do what you want. I'm handling the financial side of it for you. I don't know if you're ready to retire. Like, I don't get that sense from you. I don't get that vibe from you. And it doesn't happen too often, but every now and then somebody will retire and they weren't ready for it. And the clients have asked, right? Like, they weren't ready for it. And even after having that discussion, they've just kind of got it in their mind that, well, I'm 60 and the finances work, so I'm going to retire. That shouldn't be it. Like, there's some people that at 55, they're like, I just can't do this anymore. I'm going to retire. I'm super happy. There's other people we've got that are 70 that are working and they're like, I love it. I love going. Well, don't stop. If you love it, keep doing it.
You're listening to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management online, retire210.com. There is more to the retirement conversation than just the money. That's what we're all focused on. I don't want to run out of money. That's the number one thing you hear all the time. But are you actually ready to make that step? Could you make a part-time step into retirement, kind of ease your way in? Some employers will allow you to do that. I just had a friend who retired a year ago, and his company just called him back and said, could you come back part-time? We'll give you a full-time salary.
Wow,
and
that's a good deal. Yeah.
I'm in.
You should have retired sooner and had them offer him that.
Yeah, exactly. His wife is a nurse practitioner. She retired, and she got a call from the jail and said, we need nurses here. And so she works 1 day a week, and she is on call the rest of the week, and she's making $120,000 a year.
Get out of here.
I mean,
wow.
It's amazing the friends that I see now, and you have it right on the nose. If you are ready to leave and you just want to have that throwdown moment, rip off the apron, I'm done. Okay, that's great. But some of us, you want to ease your way in and work a little later than everybody else. It's up to you, and that's key here. Let's talk about you and your retirement and your feelings. Retire210.com is the website. 210-985-6200. We'll do a no-cost, no-obligation meeting about your retirement. Let's get it all down on paper and figure out what you're really facing as you go into the next 10, 15, 20 years. All right, so the insurance company Allianz, and I want you to put that in quotations, the insurance company Allianz, so you know where this is coming from, okay? They're going to talk a lot about income. It said we're all worried about inflation and healthcare and running out of money in their last survey. No big surprises. We're all thinking the same thing. But I found this interesting. Rather than chasing high returns, many people in this survey were interested in consistency, protection, and predictability. 92% of them said they want products that give you guaranteed income. I walked away from a paycheck. I want a new paycheck. And it's not just Social Security. So it's pretty simple. I don't want to work, but I still want to get paid. There's your job, Jay, okay?
Yeah.
I mean, really, that's it, isn't it?
It is. And look, we both knew what the big concerns were going to be before we even read this, right?
Sure.
Hey, the stock market, inflation, healthcare, volatility, it's the same things every time. And, it's what you said. You're going from your regular 9 to 5 with your regular paycheck to I've got to figure this all out myself now, right? And it's the same things all the time. What's funny with this is I usually see that it takes retirees, 3 to 5 years before they'll truly accept this. Wow. Because what happens is, right, so people we've got retiring now, they were working in some period of the 80s probably, during the 90s, up till now. And yes, there were some bumps along the way, the great financial crisis, a couple of recessions here, all that stuff, right?
COVID,
yes, there was. But if you look at it as a 30, 40-year block, it was incredible returns on the market. Incredible, right? Like you just had to put money in and not do silly things when the market went down and you're going to be great. It takes people a while to change that mindset from investments, market goes up, I've got the risk, to kind of getting out of that mindset and being like, yeah, that doesn't matter anymore. Like if the markets go up, fantastic. But my big thing now is not growth. It's consistency, stability, reliability. And you probably wouldn't want to put all of your money into something that's guaranteed income. You need something that has growth potential. But it takes that mind shift in a retiree's mind to go, wait a second, I'm not in the same stage of life anymore. And that's why I would not be surprised if the people that they interviewed for this were not brand new retirees. They were 65 plus, right? Probably. I would assume that, because 92%, I want guaranteed income. Let's get that rolling. The growth, whatever. I can let that go right now. I can have some of my investments there. I can grow some of it, but that's not the purpose of my money now. The purpose of my money now is to give me the retirement that I want without the worry.
I want that consistency. I want to know that if the market goes down, I've got protection. I want the growth, but I'm not going to give up. I'm not going to go way off on the risk scale in order to get it. That's what a lot of people feel, and it might be how you feel as well. And maybe you're just kind of formulating your feelings about retirement. And I'm glad Jay talks about these things, because it is mostly about the money in our minds, but it's also about the time and how you are going to feel as you go through your retirement years. What makes you feel good? What makes you feel secure? What makes you feel, I don't want to say sleep well at night, but, I don't want you up wandering the halls at night watching Fox Business in the middle of the night. Nobody wants that. That's not a retirement. Give Jay a call. Let's talk through it and put something down on paper. Retire210.com is the website. Retire210.com. Or you can find us at 210-985-6200. That's 210-985-6200. Thanks again for listening to Clear Skies Retirement. If you've enjoyed this podcast and you want to hear more, remember to hit the like, follow, or subscribe button on your favorite podcast platform. We'll see you next week here on Clear Skies Retirement with Jay Kirkwood.
Investment advisory services offered through investment advisory representatives at Secure Financial Management, a registered investment advisor. Exposure to ideas and financial vehicles discussed are not designed nor intended to be applicable to any person's individual circumstances. It should not be considered as investment advice, nor does it constitute a recommendation that anyone engage in or refrain from a particular course of action. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Secure Financial Management is licensed in your state, please contact their office. Secure Financial Management is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Wholesalers Insurance. Jamin J. Kirkwood, Texas Insurance License number 1421850.